All right, so welcome you all to Consolidation. This is centered on disposal. So far, I see I've done only 2 disposal. So this sitting is the 3rd time I see will do disposal for us. I wish after this class, you go and look through those questions. I have actually solved all those 2 questions. So I have to call in for something new to solve. That is why I called in for this particular question. So I'll give you the 2 questions I see I've done on disposal. Right after this, try your hands on them and you are good to go. Okay, so first question we'll look out for is called target group. Target group. If you don't have access to the question, kindly let us know so that we can share it. Please try and restrict the sharing to. I beg, not every platform have to put it on. I beg you, for your own safety. It says prepare consolidated statement of comprehensive income for target PLC group for the year ended 30th June 2024. Yeah. Fresh from the oven, 30th June 2024. So right after reading the requirements, I want you to do something. Count the items presented in the P&L and check the number of lines. Let me check the number of lines. I have your standard marking answer booklet, some of them here. So let me count the number of lines. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29. So your standard answer booklet has 29 lines. So when you count the items here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, you go there. So we are safe. So go straight to your answer booklet. Let's go to the answer booklet.
Hello, Target.
Yes, please.
Please, can you share this question with me?
Wow. I shared it on the page in the afternoon.
In the afternoon. Okay. Thank you.
All right. So let's go straight to the game. Anytime target is serious, it's MCCU. And discipline, we are more than serious. It's a busy discipline. I just want to surprise some people this city. Small. So, question number 1. Question 1. You write here, target group. Target, they say PLC, so bring the PLC, add group to it. Say consolidated, Right after the requirement, this is what you have to do, please, I beg you. Consolidated statement. Is it consolidated statement of comprehensive income for the year ended 30th June, 2024. Question I will date here for say.
Okay, the way you are concerning these questions.
This is straight from the engine room. They've assured me that 3 questions I have to solve. One of them will come. And I'm very happy. Have you seen that? I send that question single. I'll send them single like that. But it will be part of your intervention material. I will share them with you. Just Friday, all your standards are ready. And this time around, we are not just giving you IAS 10 is coming, IAS 16 is coming. No. We are backing it with specific questions. I know for sure that IC will call us by all means. Me and my boss, IC will call us by all means. But for us, we have evidence to our questions. So when they call us, we have evidence. We know where we pick the questions from, so no hala. All right, the reporting currency. Please, what is the reporting currency? I have an issue with my computer at the moment. So I expect you to open the question so that even if I don't project, you will be fine. What is the reporting currency? Ghana cedis.
Yes.
In what?
Million.
Thank you. It's in millions. It's in millions. So that is what you will have to take notice of. So you go and do that too for me. And you are good to go. They have assured target. Target. Kawakuma to one of the questions you are going to solve with them. We'll do it for you. I said, yes, boss. I don't know which question they will do, but if I show me one. So Ghana cedis in million. Then leave the entire first page. Don't write anything there. Leave the entire first page. Go to the next line, next page, and still write question 1 here. Write workings. Tell the examiner all figures are in what? All figures are in Ghana cedi of millions, except otherwise stated. I'm done. Now, next show. You see, right after reading the requirement to know, you see, you spend a lot of time reading things that will not add value to the solution you want. And at the end of the day, when you had a chance to do the work, they say, get ready to stop work. Follow this approach. It has been tried and tested. All right, so once you finish, do your workings number 1. Workings 1 is the group structure. And I've shown you where you can get your group structure. You can get your group structure either from the top, note 1, or note 2. So let's go. So right from here, straight. Straight. Let me start from the top. It said the following draft financial statement relate to Target PLC, a public company. Target PLC is a manufacturing company, but also has a wide portfolio of investment properties. Target PLC has investment in a baby. Both are public limited companies. Both are public limited companies. Draft financial statement. Go straight to the note 1 and 2. Note 1. On July 2022, Target PLC acquired 60% of the equity shares of NA, a public limited liability company. That is all what I need. July 2022, Target acquired 60 of NA. So here what you do is that, you see how we solve examination questions? You read everything and time is going, you read, and you're reading Abema, we are then in the move. Yes, sir. Right here, targets. They say targets acquired. Right here, targets. Right here now, targets acquired 60% equity stock of NA. They say 60% here. Go back and read and get the other acquisition story. I don't know where you have to pass to understand the specific console question I'm solving with you. I will not solve plenty. My solvables were 3. My solving console questionables were 3. And one of them. The only thing the examiner will do is divide the figures by 2 and delete one of the footnotes. Because originally the question was 35 and other 20. So we have to reduce the notes. All right, so I'm done. So enter this note. I'll not read again. I'll go to the next one. It said Target PLC disposed of 20% of the equity interest in Target. All what you must be interested in is this. Up to this, that's all. Here you are looking for percentages. You are not interested in figures. They retain earnings. No, please. You have to be careful. Here you have to be fast. You are not interested in retain earnings. You are not interested in no, please. You see, strategy. How you have to win the examiner. If you try to finish 2, you jump steps. If you try to put all the steps together, you won't finish. So if you don't develop a strategy to finish fast, we will never increase the mark for you. So they say Target PLC dispose of 20% of equity interest in on 31st March 2024. So what do we have to do now? Right here, disposal. Disposal. 20%. This one took place. I can put it here. 31st March 2024. Meanwhile, when are we preparing consolidation? Which year are we doing the consolidation?
30th June 2024.
So why do you allow now? When will be the beginning of the year? This year, when will it start from?
1st
July 2023.
1st July 2023. So why do you allow now to be with you from now then you relax. As at 31st of March, you say I'm selling now. So how many months will now be with us?
3 months to end the year.
3 months to end the year. In fact, what you said, just as what you said, it's in the marking scheme. Just as you said, 3 months to the year end. Today I saw it in the marking scheme. So 2024. So how many months consolidation? 3 months to the year end. How many months consolidation for now?
9 months.
9-month consolidation. I love that. That is it. So you see why anytime you get a question, the approach we use to finish fast. This was the same approach when I left with 2 weeks to the exams. In fact, now 1 week. You are even lucky, left with 2 weeks. Abigail, that was what she had, a week to the exams. Even though she deviated, Abigail had a question of this nature. She had a disposer. Abigail had a disposer, but it was a balanced disposer. Yes. She deviated. I'll show you what she did. But it came, she has passed the exams. Now let's continue. Here you are not looking for, don't read currencies, read percentages at this stage. Because at this stage, I'm looking for the group. I want to get a group structure well so that I can go ahead and do my skeleton. Now, I'm done with now. Whatever they said again, they said the remaining 40% holding, that means now it has become an associate. So it means from the 3 months to the year end, now become associate. True or false? True or false?
True.
Good. Now let's go down. Note 3, they say target again. Acquired 80% equity interest of baby. It's okay. It's enough. On 30th of June, 2022, 30th of June, 2022. That is all what we are interested in. So 80% of baby. Like this. Do that here. Now, what will be the group holding? Total group holding. Call it group holding. Group holdings at the end of the year. 40 is to 80. NCI. This is going to be the NCI here, dash 20. But when you are done, right, third exam now, the NCI from July, from 1st July 2023 to 30th of March 2024, NCI will be what? 40%. Do you agree the NCI will be 40%? Or you don't agree?
Agree.
We agree, sir.
All right, so that is that. Please, for consolidation, if you have not confirmed the group structure, don't start. It may amount to deviation. It will amount to deviation. It will amount to deviation. The next question I'll solve to is also powerful. All your first 3 questions are available. This sitting umpire a bigger. Let's go to the B. Effective date of acquisition, workings 1B. Or effective date of control. Baby. Now is what? And baby. I'll you have the question.
Now it's 1st July 2022.
Okay, so 1st July 2020.
2022, yes. And baby is 30th June 2022.
Okay, so let me go to the place. Now it's the 1st June, right? Or 1st July
1st July
20.
22.
And then baby is
30th. They're
30th.
just playing with the date. The same 30th June 2022.
But it's the same. 30th
It's
June.
the same. Yes, it's the same. They just use beginning and the end, so it's the same.
Yes, to just confuse us. You like-
Mm,
Now, next period of consolidation. Period of consolidation.
period will be 2 years, 2 years.
Aha. What happened is that
9 months. Oh,
now was sold during the period.
Okay.
So Nas owned, because it was for now, we want to see because now was disposed of or lost control up to 30th of June.
No.
30th of what? 31st March,
31st
right?
of March.
So up to 31st of March 2024. So hence 9 months consolidation. Then tell the examiner and 3 months what? 3
Associate.
months associate. I love that. Plenty people don't add it to it and they end up, it's in a marking scheme. Oh. I'm only copying the marking scheme for you. 3 months associates. Then what about baby?
Mm, mm.
so I'm trying to understand. I'm not seeing it well. Now, dispose slash what?
Slash loss of control.
Okay.
Loss of control.
We lost control as when 31st of March.
Yes.
So consolidation will end from there. And here, let me tell the gospel truth. If it will be balance sheet, no consolidation, true of us.
True.
And that was the question Abigail wrote. But she consolidated the subsidiary. She did a consolidation for now. Meanwhile, it was a balance sheet, so no consolidation for now. And right after the exams, she reported to the office and she solved the question. And she found out that she has deviated. And I still told her that if you pass, you pass. This one is nothing. All right, so if it is balance, you take notice. No consolidation. Baby, full year consolidation. If you write 2 years, we will not agree. Because P&L is for a year. It's only balance that you can write 2 years and we'll mark it for you. Agreed.
Okay. All right.
Balance sheet is cumulative. From the day we started up to today, that's balance sheet. That's why I say asset. But for P&L, it's for a particular period. So either 6-month period, 2-month period, or a full year or 1 year period. Then we are good to go.
Okay.
You see, when you are done like this, it gives.
So does it mean that in case there's depreciation, you won't do like the way we multiply by the number of years? You
No,
won't do
not at all.
that. Okay.
For depreciation in over here, no, we take only 1 year depreciation.
Okay.
Agree.
So target, if you are like assuming this question, there's a financial position, will you still maintain the 1 year for both financial position and the income statement, or you do only 1 year for the income statement, and then when you get the financial position and you are doing PPE, you take 2 years?
Okay, so here the 2 years and 1 year does not reflect significantly. It only reflect when there's additional depreciation charging. However, imagine this question, there was a balance sheet attached.
Yes.
Tell us that you do a full year consolidation in a P&L, 2 years consolidation, or a full year for balance sheet. You can decide to write a full year, we'll mark you. Won't have a problem with you at all.
Okay.
Somebody can also go further and say that for financial position, 2 years consolidation.
Okay.
Will mark you.
All right.
But don't let the 2 years attach financial position. Don't let it come and be like the whole consolidation is for 2 years.
Okay. It's very clear.
Good. Now, when you establish this in the exams, you can now go and do your mapping. So now the question has become so clear. If you don't do this, you deviate. I'm sure Abigail did not do this side first. I'm sure. That is why she consolidates everything, because some people, they've told them that if you go to examination where you see console, start consolidating, right? Start with the skeleton. No. We don't advise that. We will tell you, okay, be sure of the group structure to avoid deviation. If you are okay about the group structure before you start your consolidation. So now we are consolidating baby full. Now we are taking how many months?
9.
9. That's all. So it starts line by line consolidation. Line by line consolidation. Have you seen how nice that thing? Please understand, oh. Whatever you pass to understand, kindly pass to understand. So now let's start. Right revenue, full of target 9/12 times 132 plus 90, leave it, don't close it. Line by line consolidation. I don't know, I have an issue with my PC is going slow. So help me out.
Okay.
With the figures. Know where we are picking the figures from. We beg. Number 1.
Revenue.
Revenue.
Yes. 420 plus 99.
99.
Yeah, 99.
Why 99?
There's 132 times 9 divided by 12.
What did that max you?
Why?
You want to see 9/12 times
Why?
132.
Target, why?
Who did that max? We assume that you have derived. You have stretched your neck and copy somebody's answer.
Then I am exam horn, neck, ostrich neck, can't wait me who be person.
But for us in India, you see, the exam marking principle states that any figure that is not in a question, but I see it on your answer booklet, you have to tell me at least, if not all, about 75%, show me where you got them from.
We hear.
Plus,
plus 90.
That's it. Don't close it to leave them. Next item on the list.
Cost of sales.
Please, cost of sales, I don't think it will go here. A lot of issue will suffice it. So do workings. Or if you want to, maybe sometimes it can go there. Let's try and see if it will go there, okay?
All right.
Cost of sales, target owners
304.
304 plus
76 by 9 over 12.
76
By 9 over
let's do
12
9 over 12
by 76
plus,
plus 72.
that's all. Next,
Gross profit.
good. Then we leave it.
Investment income.
Investment income.
42.
42. Please,
Yeah.
if you are, because there's associates, before you get the profit after tax, create a column and call it profit from associates. Agreed? Please,
Before you do what?
before you go, because there's associate in the question, before you get to profit before interest and what? And tax. So on top like this, right here, share of associate profit. So when you look through the things, let me show you where you can place it. Let's go to the question. So share of associate profit. It's a workings you have to do. And the working in young way. Let me show you where you have to do it. Where is the finance cost?
After gross profit.
Mhm.
Finance cost. No. After operating.
Good. So right after operating, before the finance cost, create a column and say share of associate profit. I beg you.
Okay.
I God beg you. Anytime there's associates in P&L, create a column and show it. If you come and add it to investment income,
My classmate we are not one masters. My group study mate we are. Yeah, now guys, I say paper two. We ever so our best one now for baby I say na for
I will save. I will save. Okay. Please, I hope you understand.
But target, why is it that when you add it to investment income, you will be marked down?
We'll mark you down.
Why? Because it's actually an investment income.
No, you have diffused the purpose of associates. Let me re-echo this. Let me in fact make it so clear here. Why will mark you down? Number one, associate is an outsider. True or false?
True.
Number two, we don't consolidate associate. True or false?
True.
Number three, under equity accounting method, only two things we have to see on its own representing associate. On your P&L, business combination stated clearly that before your interest expense, write down profit from associate. That's a line item on its own. Don't add it to anything.
Okay.
Number two, on your financial position, among your non-current assets, call it investment in associate. Agreed?
Agreed.
On the once the son in Yama Fanka or Yama who.
Okay.
Nti ade baako pɛ na ɔno so wode bɛma no no abusua agyapade mo kyɛma ama no bi agyapade wenye bi Na ne din kaka mo ye na ase se ono so kebusua no ena mo se mo ye. Mo di ne din akwese obi din ase. No.
Okay.
So for that one, dear, if you do it, the mark you down. And this is the time. And the board.
Mm.
This is blue side. After the exams. So the mukona mother, I just a muti TV so. Okay, so I'm done. Where are we now?
We are at investment income.
So 42 plus
42 plus 9/12 by 19
plus
plus 5.
next.
Next is admin cost. Administrative cost. That's 22
Plus
9/12 times 18. Then we have 15. Sorry, we have 18. Please correct correct the 18 to 12. It's 12.
like this.
Yes, like that.
Next.
Other admin expense, other expenses. We have 34. It's 9 plus 9/12 by 18. And then 15.
Come again.
15, 1-5.
Okay. Next.
Yeah. Next will be our operating profit.
Good. Operating
Profit.
profit.
Then you said we should create a place for share of profit.
Of associate what?
Profit.
Profit. Next.
Net finance cost.
Net finance
Cost.
cost.
2 plus 9/12 by 6. And then plus 9.
Next.
So does it mean that the operating profit will not even show at all?
It will
The
show.
operating profit is there.
Yes, it will show you.
It's
Okay.
there.
Okay,
Because
so
we have been failing, that's why
what happened is that you have to leave. Yes, I understand. You have to leave a line here.
So that it will be what?
So that will add. Then we get profit before interest and tax.
Oh, okay. All right.
EBIT. Or you can decide not to name it. Just that you add them.
So there's profit before tax.
Yes, please. Yeah, there's profit before tax.
Yes, they did profit before tax, but they didn't do profit before tax and interest, but there's profit before tax. After the net finance cost, there will be profit before tax.
Yes, please. So let's go. Profit before what?
Tax.
Next.
Income tax.
Wait, there's no footnote against it. Open a bracket. What do you do?
30 plus 9/12 by 7 by 3 plus 3, sorry. Plus 3.
Plus.
It is 9/12 by 7. 7 plus 3.
Okay.
Okay.
Wait,
then we have it for the year.
free. This one is automatically free. No footnote. No footnote. usually will come and against it. No footnote will come and against it. So what do you get for the income tax? If you put all the three figures together, straightforward.
38.25.
Are you sure?
Very sure.
38.25. 38.
Confirmed.
All right, so that is that.
Other comprehensive income.
OCI.
If written the items that will not be reclassified to profit or loss.
Yes, that's the nickname.
Okay, so we have gain on property revaluation.
So,
14
on
and
revaluation.
15.
Do you have for all the companies or only the parent?
Parents and nah.
Target.
Yes, please.
Create
Yes,
after that. Hello.
hello.
Yes, I'm not seeing any slot for profit after tax.
Target, he's saying that we didn't bring a line for profit after tax. That's profit for the year. So let's put it after the income tax.
Yes, it's true. It's true. It's very true. OCI should come down small.
Hello, Target.
Yes, bosses.
I can't hear you.
Can you hear me now?
Yes, please.
Yeah, I think my system was going slow. That's right. But you'll be fine.
Okay.
Hey, I don't know where you have to understand this. Thank me after the exams. After the exams. And when I'm done, I'll give you 2 questions. That one, try your hands. They are similar to what we are solving. They came. One I know that is 2019. And there's one to I know that is around 2022. Because Abigail wrote corporate reporting somewhere, either August 2022. And the paper she wrote is 1. And who I've solved that, all those questions, I've solved them. So please, do you want the video or you want the question itself or you want the solution?
You want everything.
So we want both.
Hey, wow, Oliver Twist. Always more. Yes. Okay, I'll give. Don't worry. As usual.
Thank you.
I'll pass all of them for you.
I want you to mark the paper craft for me.
Okay, if you want your paper to be marked before the exams time, I'll give out a mock question. Solve it. That the answer, the mark that you get is the same as the final answer. You should page one. All right, so this is it. Ampai Ewaha Ebeja for this sitting. So take notice of. Don't upset yourself. And the way a question I know so if about Kwania so near near Contessa, near Sanko for Bakwamba, near best of near. That is how we are doing the show. All right, so I think I have to. Let me check my distance, my distance.
Alan,
Let me check. Okay, please, I hope you can hear me now. My system is a bit troublesome. I hope you can hear me now.
I hear you loud and clear.
Good. The way I'm happy this sitting is much more than you. Because I have to grow. I need your pass for something, for some promotion. If you don't pass, they will not promote me.
Then you will be promoted.
If you don't pass, I'll never. The other people, they pass. Left with only the ICA. Left with the ICA badge. Then I'll get my award. Outstanding lecture for the 2 consecutive years.
your award is what?
Yeah, so wherever I will pass for you to pass in the year, that one is between me and my boss.
I guess any award show you be careful.
Come again.
The way you are showing us, be careful.
Oh,
My neighbor.
who's wrong?
What?
We've done this game, so yeah,
Let's continue.
okay, so I think we have to proceed with the game.
It's gain on property revaluation.
Gain on property revaluation.
That's 14 and 16.
14 and then 16.
So no,
my
so that's
concern-
the 9
my
months. So we
concern
pick
was not
16. So 9 over 12 by 16.
Can you come
Baby,
again?
still my concern was not rectified. Or profit after tax.
Let me.
I'm saying
We left a space for it too.
we left a space for what, please?
Okay.
There was a space here. Profit after what? After tax. So gain on revaluation, let's go. Parent owners. Parent owners
14.
14 plus 9/12 times what?
16.
That's all right.
Yes, target.
Next, is there any other thing again? Or we are done?
Yeah. No.
Is that all?
Okay. We have total comprehensive income for the year.
So total comprehensive income. Now you leave it. Next,
That's the end.
but when you are done, there's something that many of you don't do it.
Profit attributable to NCIN parents.
Yes, my thing was someone here.
Because it's so difficult to understand.
No, today I'll break it down for you to do it.
Okay.
You see, there was a time I did it at the Presby. Master Godfrey, do you remember that Presby, Dansuman Presby Church?
Exactly.
And I told you guys about the sharing. That year, we had it for 5 marks.
Yes, it was ever.
Please, this year, do you want to do it or don't want to do it?
Do it. Every mark is important.
Okay. So this year, I can assure you that you have something like that. So take notice of that. Now let me show you what to do, how the skeleton look like. We need 3 lines making 6. So 3 lines making 6 is what you need. And some of the figures, you have them already. Don't let it be a very difficult task. Don't let it be a very difficult task. See it at normal tax. Let me do it for you here. You have to share 2 things. To say profit after tax attributable to. The danger is that if you know that your profit after tax is wrong and how on share, don't bother yourself to share it. If you know your profit after tax is wrong, don't bother yourself. Attributable to, right here, NCI, owners of, normally add owners of parents. Then bring the total. That's all. Then come and write total comprehensive income attributable to owners of NCI and who? NCI and parents. We are the show. I did we are the show. I'm done. Now, the next one, you see, who to me yeah they will go, who to me Jayo, because look at something. You've actually copied enough. You have actually copied a lot of items. But the income tax, I don't understand something new. how you got your question, the answer you did for me. Please let's all go to the income tax.
You enter it, all the figures on your calculator. That's what you get.
Let's all go there. Let me bring the question.
I didn't enter all the figure on the calculator. I did it one by one, and I still got the 38.5. So I don't know.
Now, watch something for me. This now not understand. Look, oh, the income tax here is negative, and here is also negative, and here is positive, and you added everything together.
How can tax be? How can a tax is an expense, so it should be in a bracket.
No, it was not mistake. Oh,
Deliberate.
it is a trap we have set for someone who.
But how can income tax be an income for you? Is it a deferred tax?
Income tax can be a positive answer. We have situations where current year your tax, your profit was nil, so there's no tax on profit. However, because last year you overcharged your taxes, it's a credit to you.
That's right.
So it can now negate and make your income tax expense positive for you.
Oh.
Agreed.
Agreed, but like at least what is this? Oh.
Be to miss your examination. You see,
that
is why I am like exposing the issue that may pop up to you so that you be aware, fully aware before the examination starts.
Okay. Then in that case, it will be less by the 3. So it will be 32.25.
Good. Because per the marking scheme we drew this afternoon, that's not what I saw inside though. So let's go back and amend our income tax. So this one, I don't know how I'll do it.
Then it means that you need to put the 30 in the bracket, put the 30 in the bracket, put the 9, and then leave only the 3. You have a very big bracket. That one is not, that one is just grouping. So the 30 should be in a small bracket. This one should be in a small bracket. Then the answer will be 32.25.
Okay, so it should be, is it like this?
Like that.
Like
yes. Yeah, good.
Okay.
Yeah, that's it.
Okay. Please, I hope everybody understand. So in exams, when you are picking the expense, we have to be very, very, very extra watching, or else we may lead you into trouble. All right.
Sorry, sir.
Yes, boss.
Please, will I be marked down in case I make the 3 a negative figure instead?
You mark correct. So long as you get 32.25 for us, you don't have a problem.
Okay.
Please, all your questions. Ukona PNL to secreting tax free. It's only me when they give me chance to set question. I'll let my income tax will be affected, especially in disposal. I'll bring tax rate inside the question, and we'll do a disposal. It will change the income tax figure. But in your case, I've not seen some in your case before. It's the future generation. Okay, so I'm done. Now with this, where do you start from first? Where do you start from? When you have done something, then you go through the footnote. You go through the footnote. You go through the footnote. With the P&L, we don't have a standard working that you have to do. P&L, standard working BNE. But once control is gone, be prepared to calculate goodwill. Let's all go to the footnotes. But before that, once control is gone, here, now, once control is gone, be prepared that you'll be calculating goodwill before and after the control. So hence, you will need your net assets at acquisition. Or you can put all of them together to calculate the goodwill. You can decide to put all of them together in calculation of the goodwill. Good. All right, so let's start with our workings. First workings, I think you can do that will save us is a goodwill. So let's all go to the question back again. Now let's read the note 1 and note 2 to compute our goodwill. Let's go and then do it quickly. Now, note 1 says that like that too. On 1st July 2022, Target PLC acquired equity interest of now a public limited liability company. The purchase consideration comprised of cash 90 million and a fair value of identifiable net assets acquired was 114 million at that date. Target PLC uses full goodwill method for all acquisitions, and the fair value of NCI in now was 50 million on 1st July 2022. Goodwill had been reviewed annually for impairment, and no impairment was deemed necessary. So we are done. So here, what can you do? So can you calculate the goodwill here for me as your second workings?
Yes.
Okay, so we can calculate the goodwill for now.
It is 90. You pick the 90, add 50, minus 115. That will give you 26.
Ah, and you say you will not do this question. Ah. You say you will not do it. No. So that's all. I want us to add the goodwill of the other person to it.
Okay.
Let's read note 3 to add the goodwill of baby. Target PLC acquired 80% equity interest of baby, a public limited liability company, on 30th June 2022. The purchase consideration was cash 60. Fair value of NCI was calculated as 12 million at this date. Due to tight reporting deadline, the fair value of the identifiable net asset acquisition have not been finalized. Hey, some back. by the time the financial statements for the year ended 30th June 2022 were published. Goodwill of 28 million was calculated using carrying amount of the net assets of Baby. The fair value of identifiable net assets of Baby was finalized on 31st of December 2022. Was finalized on 31st of December 2022 as 54. The excess of the fair value of the identifiable net assets was due to plant, which had a remaining useful life of what?
To 5 years.
5 years. At the acquisition date. Good. So here, what do? We calculate you see, they've given you goodwill of 28 million.
Yeah.
And they've informed you that all right, so to continue from where we left off, we can do the workings number 2, goodwill. Goodwill of who? Now,
Now
we can do it straightforward. What's the purchase consideration?
90.
NCI
Yes.
of what?
50.
We call it total consideration.
Net asset acquisition 114. $26. Let's do that of Baby.
No impairment, right? For nah.
Yes, no impairment.
Okay, so let's go. How?
Purchase consideration for Baby is 60. $60. NCI 12. Making 72. We don't know the net asset, but we know goodwill to be 28.
But the net asset was given to us at the latter part of the year.
Yeah.
They said that later crowd they bought the net asset.
Yeah. So if you use
It's 54.
the initial goodwill for the net asset, it will be 44. Then later 54 came in. So there's a fair value gain on plants, which they are saying that it should go for 5 years.
Yeah, that one it will only appear in the you add it to your additional depreciation that will create. You add that one to your cost of sales. We'll add that one to cost of sales, then we are good to go.
So what do you do here?
Okay, so here what you have to do is that what is the NCI figure?
12.
Good. We'll bring it. Then what is the like the goodwill the initially we have calculated? What is
Was
the
20.
was 28, right?
Yes.
Okay, and then we have a goodwill of 28. And then what is the net asset they give us later when we're ready?
When they finished, it was 54.
Okay. So what we can do is that you can decide to use their 54. We have to use let me do two extreme workings. So this is the total consideration. Less their net asset, the one they found for us. What's the net asset they found for us?
54.
So that's 54. What's the goodwill?
18.
Now do another workings again here. We are looking for the fair value adjustment. Number one, the purchase consideration is 60. NCI is 12. If you add, what do you get? You get
72.
leave the net asset column. What's the goodwill they give us?
28.
So what should have been the net asset? What should be here so that when I subtract, I'll get 28?
44.
Good. So hence, the fair value gain is what? Fair value adjustment, the gain on the asset. It would be what? The net asset they gave us, the found was 54. But the net asset they used for the goodwill calculation was 44. So that means the difference is as a result of fair value adjustment. Do you agree? So fair value adjustment will be into bracket 54 minus 44. What do you get? That's 10 million, right? So this is what the depreciation will suffer. What will be the depreciation? How many years? What's the useful life of the asset?
5.
Within 5 years.
5.
You divide 10 by 5. What do you get?
2.
2.
So add the 2 to cost of sales. Immediately add it to cost of sales. So now what will be the goodwill figure?
18.
So do you agree that goodwill is 18, no longer the one we found first? What's the name?
Yeah. The 28.
Yes, goodwill will not be 28.
Yes.
Or you can also decide that 28 minus the fair value gain of 10, which is what? 18, right?
Yes.
Calculate the impairment on goodwill. Impairment on they said that the goodwill has been impaired.
Yes.
What's the impairment on goodwill?
10%.
So impairment on goodwill will be 10% times what?
The 18.
Yeah, times the 18. You get 1.8.
8.
Good. So now we have two figures that we can take to the balance sheet. The P&L. Additional depreciation of 2 million. Impairment of 1.8 on goodwill. Where will all this go? So go to the face of the P&L. In the cost of sales calculation, can you add 2 to it? Add the impairment to admin and add the depreciation Or you can also decide to add it to other expenses. Mostly we add to other expenses, mostly. You can also add to, so let's go to admin. Let's first go to cost of sales. Cost of sales is here. +2. Where from the 2?
Depreciation.
Good. Then let's add, in the other expenses, add impairment to it. +1.8. Where from the 1.8?
Impairment from baby.
Good.
Is back to the workings, the one you did at the extreme right. Can you go through again?
Okay, so the one we did at the extreme right. We where show you so? No, Lisa. Here we were finding the net asset they use, and that's the book value because they've not captured in fair value adjustment. So here we just followed the consideration NCI figure, we get 72. Then we compare that one with the goodwill they have calculated. Then the difference gave us 44. So indirectly, the net asset they were having was 44. I hope you agree.
Okay. You can continue now.
Okay, so that is it. Now, let's go straight to the game. So we are done with the goodwill and it will. So then now I'm done with note 2. Once a week. Okay, so from here, let's go to do workings number. Let's look through the notes. Can you do the disposal?
Okay, we are done with note 2 and note 3.
We are not.
You are done with note 1 and note 3. We are not done with note 2.
Okay, so let's go and complete note 2 fully. Let's try and finish the disposal issue. Those ones, they are not difficult. Let me tell you the truth. The real console issues are not difficult. Things that will make your console difficult are deadly standards that we add them to your console. True or false?
True.
The deadly standards that we intentionally add them. Here we've added another deadly standard to your own. So that's the thing that makes console very difficult. So let me go. Now let's go to note 2. Target PLC dispose 20% equity interest. So as soon as he dispose of equity interest, please, its control lost or control is retained after this disposal.
Control is lost.
Control is lost.
Anytime control is lost, goodwill have to be cancelled. Agreed. So let's go and cancel goodwill. How do we cancel goodwill? So we cancel goodwill by calculating profit or loss on the disposal. However, you are lucky that there's no tax rate inside most of your questions. There will never be any tax rate. But as soon as the examiner make a mistake and put tax rate inside the question, it has make it so complex. Now, in the disposal, you must calculate gain or loss on disposal. As it stands now, we can never tell whether it will be a gain or loss. So until we start what? The calculation. So let me start the calculation. Whatever we need, we'll come and pick it up. Number one, you will need, so let's go. Workings number what? Is what we are workings number.
It will be number 3.
Good. So
But from the note, it will be 2.
we will not probably write according to the notes.
Okay.
We'll write according to your workings. So it can be that their last footnote is your first workings, no problem. And you should not follow their order. You should follow your order. What you think you can do best. So gain or loss on disposal. Please bring the consideration received. What's the consideration received?
The consideration for the part that was disposed is 44.
Add the fair value of the retained portion.
The retained portion is 40% and it's going for 62.
What I've written, I can't see it too.
You're right.
Consideration received. Good. Fair value. It was fair value.
Fair value of the 40% remain.
That figure is
62.
62 or 52.
62.
Oh.
Making 106.
Yeah.
1066.
Right here, less interest. Interest in subsidiary. Please, the interest in subsidiary start from net asset at disposal. Net assets as well.
Disposal.
Then you add goodwill.
Goodwill at disposal.
Yes, please, at disposal. It will be the same figure. Then you less
NCI at disposal.
Yeah, so let's go and see if we can get those figures. Come and we come to them in. All right, so let's go to the question. And let's pick all these from the question. Even from here, when I leave you, you can complete it. Now, it says that 60 million is not influence. The following include all right, so it says that target PSC account for investment subsidy at a cost and has included a gain in the investment of 40 million within the individual financial statement to reflect the disposal. Once you are in a group, we have to eliminate that 40. It went further to say the net asset of now had a fair value of 118 at 1st July 2023. And this was reflected in the carrying amount of the net asset. All gain and losses that of now has been received. All right, so they have given us net asset as of July 2023. No, when did the July 2023? That is the beginning of the year, right? So pick the profit and accrue the profit evenly. That is why the examiner went further to say that all gains and losses of now have accrued evenly throughout the year. So pick NAS profit and take this year's 9 months, take 9 months profit, add it to 118. It will give you the net assets at disposal. Can you do that one for me? If I do one, you do one.
$140.
140.
142.
140. Okay, so let's go and pick the profit after tax for now. It is 32, right? So find 9 months out of 12 of 32 for me.
24.
Good. And then the 24 plus what?
Plus 118.
Okay. So I'll take that. So the net asset will be
142.
did you agree that you 142?
Hello, Target.
Yes, please.
I'm a bit lost on how he got the. I was thinking the 118 was for the full year, and then 9 months. We are looking for 9 months out of the 118.
No, we are looking for 9 months out of the 32.
Out of the 32, rather.
Yes, please. So that will give you 24. Then you add it to the 118. So you get 142.
Okay.
Target, I have a question.
Kindly ask.
The net asset that was given to us at the beginning,
Yes.
which is the 118,
Mm-hmm.
why are we adding the profit to it? Because I thought if you want to know the net asset at the reporting, which is the same movie, which will be the disposal date, we rather add goodwill to it. The normal thing we have been doing is like if you have net asset at acquisition, you have net asset at reporting. Then if you want to know the net assets, that will be at the total net asset, you add goodwill to it, then you get the full net asset. So why are we now adding profit and not the goodwill?
Oh, okay. Good. Goodwill will come in. Here we are adding profit because it is a profit automatically increases net asset. True or false? Profit increases net assets because profit form part of the income surplus, which form part of the equity. And net asset simply means equity. So in effect, when I give you net asset at a particular point in time, you have to add a profit made to increase it to that particular level. Now
This
here,
is the first time I'm seeing a net asset at reporting, which is which would be the same as the disposal, that we are adding profit to it and not the goodwill.
no, goodwill, we don't add goodwill to net asset. At no circumstance we add goodwill to net asset. You only add goodwill to net asset if you are canceling or exhausting or retiring the goodwill. Now, in a normal, let me take you back small to a typical net asset calculation. Help me. When you start, there you have at acquisition and at reporting, right?
Yes, we have at acquisition at report, then we have post acquisition issues. Yeah.
Have you ever seen us adding goodwill to that net asset calculation?
Not at all.
No, when you are doing the calculation, you don't add it here. No, there's no way goodwill will come in. But there had been instances where if you want to know the net asset at the total net asset, then you pick the one at reporting and add the goodwill to it.
Which question? Where do you do that? I want.
I will show you. Don't worry.
Okay, I want to find out. I want to find out because net asset is on its own. So to even get the one at the reporting, if we have a retained earnings, profit, we have retained earnings, which is same as the profit at the beginning of the acquisition, and we have total profit at reporting. So even
Yes.
the difference give us post acquisition. So what normally
Yes.
increases net asset is profit made. It's post acquisition profit that increases net asset. Goodwill is constant. Goodwill doesn't change. What change goodwill is impairment. And probably when there's a revaluation. Please, over here, we have to also add OCI to it. Do you have OCI for now?
Yes.
So add that one to it so that we can get a net asset at the date of that one to also take 9 months out of the 16. What do you get? So let me get the net asset.
12.
12. Okay. So let me calculate the net asset at disposal. Net assets at where? At disposal. First, bring the net assets as at where?
1st July 2023.
So that's the beginning of the year, 2023. And then the answer is
118.
then you add post acquisition. No, here you can say post acquisition. Profit for the year. That will be
We got 20.
out of 12 times what?
32.
So we had 24.
4.
Is it 24? I think so.
24.
Good. Then again, add the revaluations also parts. Revaluation increases net assets. So also take 9 out of 12 times what? 16. What do you get?
12.
Add all of them together.
154.
154. So the net asset here should be 154. So write 154 here as a net asset. Who don't understand? Anytime they give you disposal, all our questions, you will calculate the net assets. Then either you calculate, then we'll give you NCI, or we'll give you net asset, then you calculate NCI. All right, so let's go to add goodwill at disposal. What's the goodwill figure? The goodwill for now.
26.
How we calculated or
Yes, if it has been impaired, you subtract the impairment. But thank God they say now goodwill has not been impaired. You get it? In event where now goodwill has been impaired, you will impair it. Then get a carrying amount. Less NCI at disposal. Let's get the NCI figure at disposal. What's the NCI figure at disposal? So let's go again to get the NCI figure. We're almost done. After this, left is just 2 notes per. Then we do the sharing. Let's go to the note. Note 2. Please, what is the NCI figure at disposal? Did they give it to us?
No.
If they don't give it to you, use the same method. The same method we did for the net asset. Go through the same procedure, get the answer correct. Go to the so can somebody try it for me? Go to the same procedure to get the NCI.
You pick the NCI at acquisition, which is 12. No, sorry, the NCI at acquisition for now. Sorry, that is 50. Then since we have the profit of the 24, you have to find point 4 of the 24. Are you going to pick the NCI after disposal, or you pick the NCI before disposal to share the profit?
You pick NCI at disposal. We want NCI disposal. So what you can do is that the NCI figure you are giving to us, where is it at?
That one is at acquisition.
Good. So you have to add that one. You add net asset to the fair value of the NCI. So you add the net assets. So here was the total net assets.
You're adding net asset to NCI.
No, the NCI figure they gave you was NCI at the beginning.
Acquisition. Yes, at the beginning, yes.
It does not have. It's not the same as net assets. That one, it represents consideration, what the NCI people paid. What?
Yes.
It was like just a consideration. So when you add the total net asset to it, you become, it will give you the NCI, the date of disposal. So NCI at disposal will be nothing by, first, get the NCI from acquisition, which is 50. Then take their share of changes in the net asset. So here, let me walk you through how you can do it. It will be very simple, and you'll be fine. First of all, let's go to our solution. Again, NCI. Number one, bring the fair value of NCI at the date of acquisition. At acquisition. Do you agree that it is 50?
Yeah, it's 50.
Then say add post-acquisition changes in net assets. Post-acquisition. Their share. What is the net asset at disposal? What's the total net asset at disposal? You have it already. Yes. Do you agree that's 154?
Yes.
Minus the net asset at acquisition. You remember
That's 114.
It's 114, right?
Yes.
Then times NCI share. What's the NCI's percentage? NCI, what's their percentage? We did analysis here.
40.
Good. NCI share is 40. Yes, it's 40. So please, what do you get? 154 minus 114.
40 times 40%, 16.
Then you add, or what do you get?
$66.
Less NCI 66. This is what you get.
One 114.
Come again.
114.
What a coincidence. 154 plus 26 minus 66. I'm not agree.
It's 114.
Okay. Will you get loss or gain on disposal?
It's a loss of 8.
So loss on disposal. Where do you treat this?
To go to P&L.
Yes, please.
As a target, the calculation of the NCI, I don't understand it.
No, NCI,
Uh,
we only find changes in the net asset. We only did net asset at acquisition, at reporting. We find the difference, we share the normal way. Let me go there for you. But in ordinary, you could have done net asset at where? Net asset at where? Reporting, post acquisition. So what's the total net asset at the beginning? 114. At the end, 154. So here becomes the post acquisition changes. Then you share. We take NCI's 40% of it. Do you get it?
You take 40% of it.
Then you add to the NCI fair value at the start of the year. It's normal. NCI. That's what you are done. No.
But here, assuming we are doing normal console and we are sharing, where we share between the NCI and the group retained earnings, is that not it?
Yes, but here we don't need group retained earnings. We need NCI.
Yes.
So we take NCI share and leave the rest.
I get it. So why, that is my point of confusion now, that why is it that here we are taking the 40% of this post-acquisition issue, and when it comes to the net assets at disposal, we are taking the profit and not this one?
No, net asset, we didn't take profit. We took 154 as net assets, and it's not profit.
No, I'm talking about the calculation when we were looking for net asset at disposal.
Yes.
You made us to pick the 9 months profit and then added the other component of equity.
Then it means that, you see, the last time we went through the component of equity. What are the genetic makeup of equity? We say net asset. First of all, we say net asset is equal to equity, true or false?
Yes, net asset is equal to equity. Yes.
So if I tell you that today my net asset is this, today my net asset is, let's say, 114. Then tomorrow, if I told, okay, I've made 3 days profit, then you should add it in because profit is part of equity. How on earth did profit become part of equity? There's a portion after your stated capital, you say there's retained earnings, right?
Yes.
So profit is only adding up to retained earnings. But here, because we are not doing individual, we just congest them in one working. It doesn't show that we are actually adding the profit to the retained earnings. Because
Target, you are not understanding my question. No. You see, retained earning is part of our equity. Is that not it?
yes.
Yes.
And
And my
they have
point
it
is
up
that
to
assuming we are doing if we are doing normal console, if we are doing normal console, the post-acquisition profit, we share it between NCI and group retained earning. Is that not it?
yes. But here we don't need a group retainer, so we are interested in the NCI. So that's why we are picking NCI share.
Okay.
We wouldn't need a group share for anything. Do you get it?
The only problem I'm having with the solution is why we are picking the profit for the year and adding it to
okay,
the net asset.
why? The reason is this. I have net asset as of July, 1st of July 2023. But I want net asset as at 30th or 31st of March 2024. So if I have the net asset as at this day, then I can add the 9-month profit to it. I'll get my answer correct. Because the 1st July 2023 is not up to the date I sold the asset. Do you get it?
Yeah, I get that.
And net asset, the only thing when I add to net asset will be complete is profit. Because stated capital is in already. Stated capital is in already. All other things in it. The only thing that is not captured is the profit. So we have to add from this day up to the date they sold the asset. And it's 9 months.
Okay.
I'll be clear now.
So that profit is like the retained profit, retained earning that we always add to the net asset when we are calculating it.
Is that the normal thing we do now? We are continuing here.
Okay. All right.
But because here there's no breakdown.
Understand now.
Okay. And every disposal is inside. All right, so we are done with the loss. We made a loss on disposal. Find somewhere on the face of the P&L and you add it. And here, unfortunately, we thought they could make profit. They didn't make profit. They made a loss. Find somewhere. Or if not, you can add it to the other expenditure. But it should be on its own. The loss on disposal right after finance cost, or it should be in line with the associate profit. It should be around associate profit, loss of 8. We are done. You can recalculate the share of associate profit for me. Who can calculate? So here, let's agree. It's supposed to be somewhere here. Somewhere here. For me, I can find somewhere to create to. Loss on disposal. Or you can also decide to come and add it to the other expenses. Which one do you want? Please, which one do you want? Either you show it as a line item on its own or you add it to other expenditure.
I think we should show it as a line item.
Good. Then let's create loss on disposal. Let me find somewhere to write it. Normally it comes here, right after finance cost. Lost on disposal. Workings 3. We had 8.
And then the 14, you said we're going to deduct it from the finance income.
Which 14?
The 14 that target recorded as a profit for each individual account. You have forgotten.
Yeah, the 14, that is the there was a portion that said there was
That target had taken a gain into his account, income investment.
that was subtract for investment income.
Yes.
So we are subtract. Let's all go there so that you see where we are taking the figures from. Let me bring it. After that, I think we are almost through. Left the last complicated workings. Now there was a 14 million here. He said that Target PLC account for investment in subsidiary at cost and has included a gain in investment income of what? Where they added it, that's where we can subtract it to. You see, they've added it to investment income. A gain of what? 14 within individual financial statement. To reflect the disposal. How on earth do you gain? Oh, okay. He received how much? What's the proceed on the gain? The proceed was 60. I wanted to find out how they get the gain. The proceed was 60. What's the cash consideration is 44. Good. 44 minus the cost of investment. What's the purchase consideration target paid? Find 20% of what target paid. 20% of the initial payment. Target paid 90. Please 20% of 90 be what?
18.
18.
44 minus 18.
26.
26.
26. They are getting 14. Only God knows where they got their 14 from. But whichever be the case, we are interested in the gain they have recorded. We will not agree with the gain they've recorded. With the gain they have recorded. Can we do 20 out of 20 divided by, please do 20 divided by 60 times 90 for me. 20 over 60 times 90.
20 divided by 60 by 90.
Yes, times 90.
That's giving us 30.
Good. If that's 30, it's 30, right?
Yes.
So 44 minus 30 will give us what?
That will give us 14.
Thank you. So that is how they got the 14.
So they are saying that if 60% is equal to 90, thereby 20% is equal to X. Is that not it?
That's it. So 20 out of 60 times 90, that will give us the cost. We had 30. Then meanwhile, they sold it for 44. So they've recorded a gain. Do you know that? Let me explain things to you. If there's a tax rate in the question, let's say tax rate of 20%, we will tax it at 14 and record it.
Yes.
The tax is always on the parent financial statement, not on the group. However, the group do what you call consolidation, so they add it. But here I've not seen any examiner who have done it. It will be a new story. All right, so we've seen the 14. So go to investment income and subtract 14 from it. Let's all go to investment income.
So the general rule is that the parents cannot record any profit from disposal.
No, parents cannot record His profit is the group profit that we want. Parents can record it in its own financial statement. We will reverse it if he has done it. If he has done it, we will reverse it. We want the group profit. So let's go to investment income. Where is investment income? So minus what? 14. Because he has recorded certain income that Charlie will not agree. Now let's go to we are done with this particular footnote. So notes 1, 2, and 3. We have completed them fully. True or false?
True.
And there are 7 footnotes. Hey. You move. Pound. So let's read how many footnotes? 4 footnotes. Hey. It came up. Let's do note 6. Me one in them easy. Very soon you can do it, right? You do it for me, start work. We've done a lot on IS 19. It will come this year, so use this one as a practice. You alone, tell me how you do it. You alone.
We'll send the service costs to P&L.
Come again.
The service costs.
Okay, so service cost will go where?
You go to P&L.
Where exactly will it go? Anyway,
Expense.
good. Which of the expense? We have admin and other expense.
Either side to balance.
Maybe it has to go to other expense.
Okay, so in fact you are right. The first speaker is right. Anyway, IS 19 specifically did not say where we should treat it. He said it's an expense. So somebody can even decide to add to cost of sales. We can't mark the person wrong. But
so the service cost will go there.
The service component cost, the finance cost, IAS
The
19,
finance cost.
all of them. The IAS 19, the service component cost specific, IAS 19 never made it so clear which of the expense. There are 3 types of expense in P&L. What are the 3 types of expense? 1, we have cost of sales. 2, admin, and 3, distribution or other expenses. So they didn't state it so clear that we should send it to cost of sales, admin, or distribution. But per best practices, let me show you where your examiner said you should send it to. Even though they didn't tell you where to send it to. Even though it's not specific per the standard. But we have the best practice. What do your examiner want? So let me show you where you have to send the service component code. Can I add it to admin? Okay. Added where?
Admin, you said admin.
Yes, so service component cost. You add it to admin.
That will
What's
be
the service
plus 10.
component cost? What is the service component cost here?
It's 10.
So let's all go to admin. Add 10 to your admin figure. That's all. Wait,
and then there is a net finance cost that must also go to finance cost.
So now that we are done with admin, we can go to the finance cost, right?
Yes.
So
and then we'll pick the interest rate at the beginning, which is the 10%.
Ah. Aha.
Not at the end. You have to pick the rate at the beginning. So you pick the 10 and multiply by the 14. So the finance cost will be 1.4.
Okay. Did you agree or don't agree? Please, do you agree or don't agree?
I'm messing.
Please, okay, let's go slowly. We are calculating, but are you okay with the service component cost we just did?
Sure. So that one I'm okay.
Now, find the net interest for me. Number one, they've given us discount rate at the beginning, 10%. This come again.
You project the question.
Oh, I thought I projected or oh, I've not projected it. Sorry, I've done it several times. Yes. Please, have you seen it? Has it come?
Sure, it has come now.
So the discount rate at the beginning is here.
Yes, I get it now.
At the end is 12.
Sure.
Per the IS 19, which discount rate do you use? At the beginning or at the end?
The beginning.
Do you know that this question, when it comes on Monday, plenty of people use at the end? How you are aware? You see, no matter how we set the question, will be a different story, the amount. Because you have read it, somebody have not read it. The same way where the person have also read, you have also not read. So it will go there and it will be so 10% on what? On the net pension 14. That will give us what?
1.4.
1.4.
Where are you going to classify the 1.4?
That one too, you said admin, so that's good.
It will go to finance. I go to finance cost.
Finance cost.
I think that one there is
Okay.
because
Okay, that's good. Okay.
that one there is so clear interest there, finance cost straight. So let's go to finance cost.
Okay.
1.4. But you have to show working somewhere you got the 1.4.
Okay.
Where's the finance cost graph? So
That's
plus
the plan.
10% times 14. Do you agree?
Yes.
Okay.
And then we have the remeasurement gain that will go to OCI.
Oh, there's measurement gain in the question, right?
Yes.
Yes.
Okay. So let me go there and bring the remeasurement gain. What's the remeasurement gain? Has it come?
4.
Okay, so that's 4, right? So where will it go?
OCI.
That's all. So you have no workings. This is in which you move time over your IS 19. So any IS 24 nanam. Yeah. I saw a question, but my boss told me that it has been set already, so I shouldn't put my mind on it. Maybe if you send me a question. I have to do that. So OCI plus what? 4, right?
Yes.
You see, they are difficult note there, but we are attacking what?
But you can't do it plus 4 because it is not on revalue. So you have to create a line for it, for remeasurement gain.
Okay,
You
so
don't have to add it to gain on property, no.
so here we have to create a line item because in exams, when you are becoming hot, you can add, but the best way is to you can add. Let me you can add because please, you can add it to it. Please, you can add it to it. Cassie. Yes, Cassie. We are wrapping up and start your own, okay? We're back. Give us some few minutes, okay? Can you? All right, so that is that. So please, two things. Either you create something new or you can decide to do what? Add. So you can create something new. What do you think you will do in exam? Will you create something new or you add?
Maybe I'll create.
Okay, so if you are creating, you call it rate measurement cost rate. Measurement costs 14.
It's 4, not 14.
So yeah. All right, so the next one has to do with the next one has to do with, and I can tell Cassie that we are wrapping up to start your class. So you can join as soon as you see that we are done, then you continue your own. We are just wrapping up. Okay, so we are done with everything about note what note guys is that?
Note 6.
So in every difficult question, at least there should be something you can use it to what? To clear some marks. This is one of the notes. So far 7 footnotes. This is the 4th one. So let me just 2 footnotes. Then we are done with this question fully. At this stage, you can end. Hand over your exam script to the examiner. At this stage, you can end here and add everything together. After all, the pass mark is not what? 100. It's 50 plus 1. Okay, so let me go through the next notes I have to tackle. Let me check the one that is easy among the two. Please, the next 2 notes, your examiner will take one off. Oh, this one is too small. Let's tackle this. This one is too small. Have you seen?
The note 5.
And note 5 is too small. Let's tackle it. Oh, there's another note again.
There's note 4 we haven't handled. Yes, we've not done note 4 and note 5. And the last note in note 7.
Hey, then I didn't do. You see, the thing is, it's supposed not to be in order. Who shall know bit when what tackle you?
Okay.
Who shall know bit when why? Now want to me and no why jumping. No what so let's do note 5. Simple, mommy. Like Yama woman in Dawson. Do you get it?
Okay.
At least we can handle it. During April 2024. April 2024. That's when. But then have we published when we are up to June, right?
June.
How many months to the year end from April 2024?
Just a month.
Oh, okay. So April, no.
No,
3
not
months.
a month. A month, it is the period will end in June. So April, May, June.
Yes, April, May, June. Good. So let's see. They say
Yeah.
an explosion at a different office block caused substantial damage, and it was estimated that the fair value fell from 20 million, which at 30th of June 2023 to 14 million. There's impairment. So can tell me the impairment here.
Yeah, 6.
Okay. They say that Target PLC has estimated that cost of 3 million will be required to repair the block, but it is unsure. From this angle. But it is unsure. But it's unsure whether the current it said Target PLC has estimated that cost of 3 million will be required to repair the block, but it's unsure whether to carry out the repairs.
The repairs or whether to sell the block for a reduced price.
Okay.
The property has been left in financial statement at a value of 20 million. A provision of 3 million for the repair cost was charged to other expenses.
So here, what do? There's an impairment. The best thing that they have to do, they've not done it. You see, the impairment of 6 million that they should charge, they've not done it. The thing that they are not sure whether they are doing it. Well, look at this. Anyway, the thing that they are not sure, rather they've recorded it too. But what?
So that was taken off.
But the one that they were sure of, that the value has, in fact, has dropped from 20 to 14. Which that one, it has really occurred. The damage caused it, which means that they have to impair the asset. And they are impairment, Now, repair cost now, almost sure. So if your repair amount for better than us will be done. And mom, the one they've put the provision there. What a nice story to tell. Examiner is good. So what do you?
Hey, sir, please, have you started without me?
No, we've not started your class. So I'm wrapping up with the current class. So just be on standby.
Okay, sir.
Either you join. So as soon as we are done, then we continue with your own. If you go and after 30 minutes I wait, you don't count it means that.
Oh no, sir, I'm here. I'm calling the rest of the class members. So that they will know that we have a class.
Okay. They're already in. I've seen NS around.
Oh, okay.
So
Yes, I'm here.
So
hey, so you've joined. You're not telling me. Hey.
I think I sorry.
They say salvation is what?
Sir, it's not personal. Me, when I wake up, I call everybody.
Okay, you
even
when
when you are asleep, I want to make sure that you are awake.
Okay, so let's continue our own. Just be on standby when you are done, and then we continue that.
Okay, sir.
Okay, so over here we are going to create an impairment of 6. Again, reverse
and take out 3 million from the expenses.
3 million from expenses. Okay.
Other expenses.
Why are we taking 3 million from other expenses?
They are unsure. They are not. They are unsure that these expenses may even come in, and provision. There should be some level of surety before you bring it in. So the 3 million that they have made provision for should be taken out.
Okay. That's all. That is all. But it was one of their investment properties, so you charge it against the investment properties. So you charge it against. Here, the impairment, you see, you should go straight against where they've recorded it. Do you get it?
Okay.
So we have to find where they have recorded it to charge it against. So we are charging impairment of 6 million, reversing 3 million because they are not sure. There's no liability. They can't create a provision if you are not sure. But the question is that where are we taking it off? Number one, it must be removed from the investment income. whilst the 3 million should be reversed from where? The other expenses, right?
Okay.
Yeah, so let's do that right away. And then we are good to go.
But why are you bringing it for taking the impairment? Because the explosion is at a different office block. Office block. It's an office block.
Okay.
That caused substantial damage, and it's an explosion of an office block. It is not an investment. It's an office block that had an explosion. So it shouldn't go to it shouldn't be taking the impairment shouldn't affect the investment. No.
Okay, so do you know why I suggested something like that?
No.
Because I was part of the articulators of the question. You see, at the initial stage, they said target is into what? They said something here.
The target is what? A manufacturing company. It's a manufacturing company, but has a wide range of portfolio investment properties. So this is an office block.
Okay.
The question is specific on office block.
Okay. Okay, but we have designed our market scheme already.
So if you are really, really treating it, then it should rather even be taken from administrative expenses.
No, we rather add it to admin as an expense. You get it?
Yeah, sorry. Add it to admin expenses, yes.
Yes.
And then we take the 3 million from other expenses. Yes.
But 3 million, the other expenses, they bet you. But the impairment of 6 million is where Okay, so here I think I gave explanation in the afternoon to my boss why he also suggested something like this, but I suggested we should put it under investment income. I give explanation to it.
Target radio.
My boss was thinking the same as what you said, but I told him, said, I don't think so, because it was investment property and it was under fair value model. And in the fair value model, gains or losses goes to where? It goes to P&L. All gains and losses. So impairment is also part of loss on investment property, and hence it must be hit your P&L. So wherever
impairment doesn't affect only investment properties. No, we have impairment on our buildings and all that. We have impairment.
What happened was that this office property is for rental. It's the property that targets renting. Well, it's because I am privy to the question.
And it means it's the more you be free sentences way more Emma way near who specifically where it's supposed to be.
So
but as it stands now, I will never be convinced that it has to be part of investment property.
But I can also see that it can be part of investment. If you look at the question, if you look at the sentence, during April 2014, an explosion at a different office block, so is their investment in another office? It's an investment in another.
I love the question like this.
A different office, not where they are a different. What are they doing at a different block? It's an investment at a different location. Okay. If you look at it that way.
I don't think the different changes anything.
The different doesn't change anything. It's the office block.
You can
have so many office
several different office blocks. I was thinking that
doesn't change anything. There's something in the statement that has been taken off. You know, when they are copying, sometimes they take when you be free moon, but say
I was thinking that a double entry will be like, we have to credit the assets, then the difference will come to the P&L. So we just have to.
Exactly. No, we don't have a problem with the double entry. The way he's saying that it has to be taken from investment, and I'm telling him that say a brofu way part any second investment, a second admin expenses.
Definitely.
Okay, so can I come in?
Okay, sir.
I don't know. Nothing is a question. I said, tell understanding it, there exam no. And then
But target mope ICA for pesadi and pa. Even the mock that they recently sent out, he say, when you are adjusting the question, how can you tell me say something that is being done in 2014 now say it has been deferred? It has been deferred to 2019.
You see, I don't know how I can explain it. We always want to create.
We want to make the situation so difficult, you end up making
No, it's not difficult. Our aim is to reduce your time at examination. The purpose is that we do how because I catch you say the impairment, the other expenditure na be share. The provision na be share other expenditure. And to also have account na ya give you because we know a impairment of an investment property. But you show investment property amount. But your catcher will say your property target deal in investment properties. And they said that an explosion at a different office block caused a substantial damage. And it was estimated that the fair value fell from 20 to 14. But look at something. Target PLC has estimated that cost of 3 million will be required to repair the block, but is unsure whether to carry out the repairs or whether to sell the block for a reduced price. Sure as to, so that means automatically it has made this property an investment property because per the rules of investment property, is a property that you have not even make a decision to use it. Now they are not sure whether to sell, and they're also not sure whether to use, and they don't know what to do, and it's qualified for investment property. True or false?
True.
True or false?
Oh, false.
Oh, wait there, me and me hear you.
Because you are privy to the solution. That is why you are arguing like that.
No, it's not because I'm privy.
Don't argue it.
It's because I picked a paragraph from IS 40. What IS 40 investment property said, that is what I used. So here, if you are not privy to IS 40 entirely, you won't understand where we are coming from. We always have a point to prove. The point is that anytime there's a property, and because it has caused a damage, they don't know whether they are going to use it or not, because if indeed they are going to use the property, they could have just repaired it and use it, right? But here they say...
But how can the company be using investment property themselves? You are saying it's investment property, and you are saying they are not sure.
No, good.
How can they use
no, so even what you are saying, you have to even better my point, because if they are going to use it, if it's for office use, indeed, if it's for office use, then they could have repaired it and continued the use. But as at now, they are trying to tell you that they are not even sure as to whether they should repair it or they should even sell it.
Maybe they will want to replace it. That's why.
Okay, so anyway, you add it.
As whatever you say, we'll do for you. The
truth of the matter is that anywhere you place it, either other expenditure, admin, investment income, will mark it for you. Per the report. Yes. So please, where do you think we should place it? The welcome over to you.
But you will be our
Whoa, fast investment, man.
Yes. Yeah, so there was a mock. I think I'll solve the mock question too, in addition to these questions. There was a particular, someone drew my attention, I think, this afternoon when we were designing this.
I see a mock.
Yes, when we were designing, the one I sent on the page for you. When we're designing the scheme. So please, let's place it at, let's go. Let's go. Okay, so, it's admin, you are right. We'll mark it for you, but you see, we give room. We don't have a fixed marking scheme. We'll give a room for where sentences were not structured, because here it didn't come out clearly that it was an invested property, but I thought I have used IS 40 when I used, they were not sure. The word they were not sure to use or to sell, make investment property. So clearly, I said encore investment income, but then she never showed me. Where's admin? Admin where? Admin plus into brackets 20 minus 14. That would be 6. Then go to other expense, and less 3 from it. Agreed.
Yeah.
So now how many notes left? That come in.
2. I got 2.
2 now they are check.
I got number 7 and let's look at the number 7 and see Senya BB and then we do it quickly.
Number 7 is on IFRS 15 revenue.
Any bedding.
Yeah, it's on revenue. It's that one to me mukaka.
What about the number 4? Let's do the number 4.
Yes, let's do number 4. Number 4 only call for additional depreciation. So number 4. Let's do number 4. Say target PLC hold what? Properties for investment purposes. I hope this one is so clear.
This is very clear.
Okay. Target PLC held 10th floor.
So you see why
you see
that is who really waiting to now when you are brewing.
You see, have you seen? Yeah. Okay, Target PLC held a 10th floor office block at a fair value of 90 million, with a remaining useful life of 15 years. The first floor was occupied by Target PLC staff, and the second floor was let to Baby free of charge. The other 8 floors were all let to unconnected third parties. Agreed?
Yes.
And now read the notifier. Say, during April 2024, an explosion at a different office block. So now, how
let's continue. Let's continue. Let's continue.
Okay, so it was estimated that the fair value of the office block was 96 million at 30th June 2024. Target PLC has a policy of restating all land and building to fair value at each reporting date. The only accounting entry for the year ended 30th June 2024 in relation to this office block have been to correctly include a rental income in a profit and loss. That's good, but it needs to be reversed. It can be assumed that each floor is of equal size and value. Depreciation is charged to administrative costs. So they've not depreciated. What happened is that, please, if you rent item to yourself, so the one they've rented to Baby, it can never be invested property. You see, invested property at fair value, don't depreciate it, true of us. No depreciation to investment property. We don't depreciate investment property under fair value. But within the group, if a group member rent it invested property to another group member, then it become PPE. Agree with the group, it's PPE. But the individual financial statement, it can be deemed as invested property. That is all. So here, all what you have to do is that we are creating additional depreciation. That's all. And add it to admin. Because when baby in the baby's financial statement, it was investment property, no depreciation. But because we are adding baby's story to the group, this will become a PPE. So therefore, it will suffer depreciation. So calculate the depreciation for me. How many floors occupied by baby?
It's only the second floor.
And how many floors they have?
The total floor is 10 floor. Does it mean that they are expecting you to charge the depreciation floor by floor?
Yes, because the only floor occupied by baby, that's what you can charge you. How many floors? There are
There are 10 floors. Yes.
So the floor occupied by baby will be 9, true or false? Do you agree with me?
I don't understand though.
Okay, let me do breakdown for you.
Why not?
The total value of the floor is 90. How many floors? Divided by number of floors.
10 floors.
So making 9.
Divided by yes.
So making 9 million per what?
Per floor.
How many floors do baby occupy?
Baby is occupying just one floor, the second floor.
Which is 9, which is also 9, because they said all the floors has equal value, equal size. True or false?
Yeah, they said it.
So when they said it, that means baby's own is also 9.
Yes.
Okay.
Divide baby's own by the number of years. What's the years of the useful life?
15 years.
That's all. What do you get? So 9 divided by 15.
0.6.
0.6. And when did the thing started? When is the rental? First of what?
1st July 2023.
So how many months, how many years, how many days to the year end? Is it a full year?
Yeah, it will be a full year.
Good. So that's all. Agreed.
Brofu Baby now see the fair value of the block has now been estimated 96 in name. And what would, or when you were, if you are going to prepare the financial statement, that you use the 96 million rather?
Yes, please. That would be easy because it will become a gain. We'll find a gain portion of it. So there will be a gain of 6 million, right?
Yes, if you are taking the fair value of the beginning and the end, then there will be a gain of 6 million. Yes.
Good. If there's a gain of 6 million, what you can do to us is that you find 1 out of 10, true or false?
I don't understand.
Okay, let's finish the depreciation first. I'll come to the gain. So let's go to the account and put the depreciation. Where will it go?
They said administrative.
That is investment, so it has to be there. You have to go.
Where do you think?
I think the question they said administrative.
Yeah, we made it let you that you should go to admin.
Okay.
Yeah, we made it so clear. We are so much aware.
Administration is charged to administrative cost. Okay. So go and ask me.
I wish you can do the calculation for me.
Okay, let me do it. That is 9 divided by 15. That will be 0.6.
0.6, yes.
0.6, yes.
Okay, so 0.6. I show to 0.6.
It's 0.6. So
yes.
0.6, yes, it's correct. 9 divided by 15.
9
divided by 15 is 0.6.
Okay.
Unless you have the solution and we have made a mistake.
Because in the afternoon, the marking scheme I gave to my boss wasn't like that one though.
Then explain it.
Okay, let me explain. You see, the thing is that there was what you call a fair value upliftment. Now, each floor is 9. That one, there's no big deal about it, right? But here, there is 2 of the depreciation of the one occupied by target staff. There was 1 floor. How many floors do they have? 10 floors.
The total floor were 10.
Baby occupy 1.
Yeah.
And they've rented 8 out to unconnected people. So
Yes.
what's the one left?
The one left is the one that Baby is living in, because they are using 1. Baby is using 1, and the other 8 is for commercial purposes.
Good. So the one that the baby
if they are using and Baby is using, then the depreciation should be for the 2 floors.
That's all. So you multiply the answer by 2.
Okay.
So that'll be what? 1 point what?
1.2.
Thank you.
Okay, today you have to buy yogurt for me.
Yes. 1.2. Do you agree?
Yes.
Yep.
But this question, there's nothing inside though.
Nothing inside the can yet now 4 hours.
But in the afternoon, between me and my boss, we finish the scheme earlier. I don't know what he's using it for, but with my AV. Okay, so let's calculate the revaluation gain, and then I think we are heading towards the extreme end. Revaluation gain. What is the revaluation gain? That one too, the revaluation gain computation is skeptical. What's the skepticism about it? Now, first of all, any gain on investment property valued measured at fair value. Let me do things for you. IP investment property at fair value. Any gain or loss goes to P&L. It's a gain. It goes to other income. A gain on it goes to where? Other income. So there are 9, there are 8, which is at investment property. But the remaining 2, even though they are investment property, but it will be what? PPE, right?
Yes.
And fair value gain on PPE goes to where? OCI. Do you agree or you don't agree?
Yeah, I agree.
So apportion the gain so well to the extent that we can equally share
Some
goes to OCI and some goes to where? Other income.
Some will go to other income, yes.
So who can
So
calculate
it will be 2 for the PPE, it will be 2/10 times the 6 million. And the 8 will be 8/10 times the 6.
Okay, give me finances. Let me see.
So 8 divided by 10 by 6 million. So the 8 portion is 4.8. And the PPE portion divided by 10 by 6. PPE portion will be 1.2. The 2 will make 6.
4.8.
Come again. You had 4 point what?
4.8 and 1.2.
Okay. 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 Okay, so the 4.8 I will agree. The 1.8, the 1.2 I will not agree.
Why?
Okay. Now let's do something.
Okay. All right.
Because
the
here is what? 9 times 2 gives you what?
Times 2 is 18.
It's 18, right?
yes.
Okay, so let's say that's 18. Now, 18 minus, we had the depreciation, what do you get? 1.2, right?
Yes.
So what do you get?
16.8.
16.8. Now, apportion the fair value for me. The 96. If I'm sharing the fair value, there are only 2. So to be 2/10, right?
Yes.
Yes.
What will be the equivalent fair value?
No. Okay. And you are sharing the total and not the difference.
Yes.
19.2. 19.2.
19 point. What's the difference? What's the fair value again? What's the fair value?
2.4. 2.4.
Thank you. Yeah.
Yeah.
Please, you agree now?
No, I don't understand.
Yes.
So then how come 4.8 is correct?
No, the 4.8.
Okay.
You see, 4.8 is correct because no depreciation. Investment property fair value, don't depreciate it. It's against the law to depreciate it. But here, people, you will depreciate it. So you have to, first of all, find the total cost. It will be 18, right? Where from the 18?
So you have to look for the carrying amount before you compare to the fair value.
That is it. So you share everything. That's what they say. Each floor has what? Equal size and what? Equal value. That word over there means a lot to us. That word over there is like a spices. It will make the soup nice at everywhere, at every point in time. So 2.4 goes to OCI, 4.8 goes to where? Investment income. Agreed. Agreed. So 2.4, where 2.4. OCI.
OCI. Go up. OCI.
Based on the PP, so I can add it here, right?
That one I added
2.4. Then let's go to investment income. You add
4.8.
investment income. Okay, so any other, so we are done with that footnote entirely. So how many notes left?
1.
Have you added a depreciation to it?
Depreciation to what?
The admin, where we come and add it to, right? The one.
Yes, that's the 1.2.
Okay, so left the last footnote, then we are done, right?
Yes.
Finally, last footnote.
That's the number 7.
Note 7. I think that note they would delete it.
But let's do it so that we have the idea. Should in case suppose therefore that.
Okay, so on January 1st, 2024, how many months to the year end?
January, February, March, April, May, June. 5.
Okay, so they say that Target PLC entered into a contract to sell 10,000 units of a new product called, what's the name of the product?
Dockers.
Yes.
Hey. No.
Dockers
the customer, please.
Okay, so a new product. If I hear it's supposed to be Yoi. The name of the product is called Yoi. It's called Yoi. Yoi. You will see Yoi arms. Hey, that 25 it doesn't go.
I didn't hear.
I don't know. Let me leave it like that.
Leave it.
When I finish, I'll change it. Okay, so your product is called D or whiskey or Dockers. To a customer for what? 1,000 Ghana cedis per unit. What's the total money are we looking at for?
That would be 10,000 by 1,000.
Okay, that's good.
100.
10,000 by 1,000. That should be 10.
10,000.
That should be 10 million.
And that should be 10 million, yes.
Okay. It was agreed that if the customer, verbal consideration, ordered additional 5,000 units, a volume discounted price of 950 per unit will apply. Full stop. 6,000 units were manufactured and delivered in the 4 months to 30th of April 2024. So, which consideration are you going to use? Is it the 950 or the 1,000? First question before we move on.
They are saying that they've entered into a contract, and the contract is that they will sell 10,000 units of a new product to a customer for 1,000 cedis per unit. It was agreed that if the customer ordered an additional 5,000, then a discount price of additional. So it means that it has to be 1,500. It has to be 15,000 before the customer will enjoy the 950.
That's it. That's it. So therefore, the condition, they have not met the condition, right?
Yes.
So instead, we go back to original contract. True or false?
True.
So how many units was manufactured?
The manufacturing unit is 6,000.
Okay, so let's continue. It says that 6,000 units were manufactured delivered in the 4 months to 30th of April. Okay, let's go. Minor defects discovered in the first 6,000 units due to an error in the manufacturing process. It was agreed that a credit note of 40, what's the meaning of credit note? That means a reduction of $40 or 40 Ghana cedis per unit will be issued as a compensation. Target PLC and the customer agreed to net this amount off against the subsequent payment for the future orders. So that means they are down, the 6,000 won't suffer the 40.
They paid it already. So like they are giving them a credit so that the 7,000, they will take the 4,000 by the 6,000 value out.
Okay, but how do you know that? Why in the question they said they paid already, or you assumed?
I assumed.
Oh, okay. But when you assume there, that one is not. We not said it in the question. No, we have assumed. No, Allah. Let's continue. No problem. Let's see what will happen. Now, it says that a further 7,000 units had been manufactured and delivered by 30th of June without any defects. Target PLC has included 6 million in a revenue. That's 6,000 times what? 1,000 units, but has not recorded any additional revenue. As the directors are unsure the correct accounting treatment. So what will be the correct accounting treatment? So in all, how many units have they delivered so far?
The total delivery will be for the 6,000 units and the 7,000.
Good. It still does not meet. It still does not meet the condition, right?
Yes.
So therefore, the 950 price is out of the game. True or false?
True.
All right. So once you understand this, I'm okay. At least it will reduce the problem or the burden. Now the problem has to do with the calculate the defect for me. What is the defect? The credit. Calculate the credit for me.
40 by 6,000.
That will give us 40 by 6,000. What will be the answer?
40 by 6,000. That will be 240.
So that will be 0.24 million, right?
Yeah.
Good. So that's the credit. That will be 24 million. I will agree. Then we'll deduct it from the final revenue. Now, second point, you see the revenue. How do we get the revenue attributable to the 7,000? We have to find what you call the average weighted average revenue. Weighted what? Average revenue. That is what we have to find. The 6,000 they have done. We don't have a problem with it.
Target where IFRS and 15 and
IFRS 15 revenue. This is a percent for revenue brand. I said that the best consumer.
Unifrim.
Or that way the paper.
It has come continuous for 2 weeks. I'm not sure to come.
Internet the best consumer. You have found on its own. We will not bring it on its own. Like. Okay, so finally, let me do the workings here for you. And we are good to go. What will be the workings number? Or you've lost count?
Just put note 7 there. That's all. If you send the video, you understand.
7 revenue.
Yeah.
The credits given 40 Ghana cedis times 6,000. That would be Ghana cedi of 0.24 million. Do you agree?
Yeah, I agree.
Then we now continue and tell the examiner that for the 6,000, they are right for recording what? 6 million, right?
Mm-hmm.
Because it will be 1,000 times what?
Times 6,000.
Good. For the second one, the 7,000 order. So now, the 7,000 order. Do not meet the condition, and hence we cannot use the 950 solely. So here there are two prices here. So we have to use what we call weighted average price. And we are done. We use weighted average price. How do you get it? Let me take my time to do the calculations for you. You see here, how much left from the first order? What's the condition? What is the total unit that we should sell before we can meet? We can get
15.
it.
15,000 units.
That's not 50. It's not 15, or not agree. Or
They said that before you can enjoy the discount, you need to buy 5,000 extra.
good. So there was a condition there. The condition stated that you must buy 10,000 first. You get it?
Yes.
Before you order for additional 5,000.
Yes.
Good. So here they've ordered for 6,000, true or false?
True.
So how much of the 10,000 left for them to order?
4.
Good. So first thing is that to get the weighted average cost, tell the examiner first, bring the order left. So to the 4,000, how much do you say we charge? 4,000 times what?
That would be 1,000.
Good. Now plus, how much will be the extra one they have to buy?
5,000.
At what?
950.
Good. Now divide everything here by what? By the overall total. You get the weight. I know that plenty people not do this. Don't worry yourself. Divided by the units. 4,000 units plus what? 5,000. What answer do you get?
Hey. Okay, you are working as if you are looking for if I say interest weighted in average interest rate to do for loans.
Borrowing cost.
Borrowing cost, yes.
It's also featured in your exams.
The first bracket is 4 million.
Okay, we need
Plus.
a answer.
Ah.
All divided.
4,
4,
4,
4,
5, 1.
950 plus 4 million. The top is 8750. Divided by.
Are you sure?
If I enter, I have 445.1.
5,000 by 950. That is 4,750 plus 4 million. That's giving 8,750. If you're adding the zeros, they're going to be 8,750 with the 3 zeros. So 8,750,000.
Yes. Yeah, divided by 9,000. What do you get?
So 8,750,000 divided by 9,000. That would be 970.2.
Can you come again?
972.22.
All right, so this is how much they should sell the 7,000 for. The revenue from the 7,000 will be revenue from 7,000.
Revenue from 7,000 will be 6,805,555.
Let's write it in the form of millions so that it can be compatible with the one that we've done on the face of the financial statement. So it will
It's
be
6 million. So 6 points. It will be 6.8 million. And
yes,
6,800 and
then you say less the cost, the credit, right? So 6.8 man. What's the credit? Credit 79. 0.24, right?
yes.
So you less it and then we are good to go.
And on the bay, the effect will PNL, so the effect the one so.
Because you see, we are not going to reduce the money. We are not going to get the entire 6.8 because we promise the customer that we agree per the contract.
The income statement has any effect to be our income statement this one now.
It does. It will affect revenue. We add this figure to revenue. The final answer is what?
Okay.
You add it to revenue because if not
6.56.
come again.
It will be 6.56.
I make this 6.6 for us.
It can be 6.6, yes.
All right, so now let's go to the main solution. And that's all we are done. Finally. Last.
Effect ben the whole revenue, so as I say.
No, you see, they've not recorded it too. They've recorded only the first revenue. They have supplied the second 7,000. They've not recorded it.
Question again.
Come again.
I said next time when you come, you have to explain that portion again. Why are you recording 6.6 again? I don't understand.
No, you see, the issue is that where do we get a 6.6 from?
It's from
which of the revenue? Is it the first consignment or the second consignment?
It's the second consignment.
And they say they've recorded the first consignment, so we are only recording the second one for them.
So they have understated sales.
Yes, they've not recorded the second consignment. They've only recorded the first one. Let me go to the question again.
Okay.
They've only recorded the first consignment. They've not recorded the second. So that's why we are recording it for them. Yes, they say that Target PLC has included 6 million in revenue. That's the first one. 6,000 by 1,000 for the first unit, but has not recorded any additional revenue. Do you get it?
Yeah.
So that's why we are recording. They will net off the credits that they agreed from it. That's all. So on that note, we are done. Please, I'll do the profit sharing later.
Okay.
So add everything and balance it for me.
No problem. When are we meeting?
Our next meeting is on today's when?
Today is Wednesday.
We are meeting on Saturday dawn. We are doing
Target too far.
come again.
Saturday is too far.
Because tomorrow is when? Thursday, right? Tomorrow.
Yes.
Okay, so we can meet Thursday 10 p.m. So meet my one night or Thursday, there's no problem. The truth of the matter is that Thursday I'm doing public sector accounting at the dawn and the evening. Then Friday I do financial management at the dawn and evening. Then Saturday dawn I do corporate reporting. I'm going to do one standard that will drop. I will join the FR people because I'll do borrowing course on Saturday and Sunday. Yes. And I'll do leases. I think a home from Australia. So you by Friday, dear. So I'll change Friday, and I'll change Friday. Yeah, confusion. All right, so on that note, we are done.
Okay.
Please add everything now that you can add everything, push it to the stream and balance it off. So my next time meeting you, I'm only picking this figure. I'm only coming to show you how to do this. And please, someone, I need your answer to. I'm only come to do this side. Just the sharing, and then we are good to go. Please, Ernest and then Cassie, you have to rejoin with the link. So when I end this section so that I can get their video for them. Thank you very much. I left it only one question more. Then I'm done with consolidation. But however, when also your question I'll still solve I think 2 more questions and they come fly. I'll still do it with you. At least for you to get an idea and understanding of how things are done. Thank you very much for coming. I'll see you when I see you.
Bye.